Thanks very much, Deborah. Good morning, everybody. It's morning here in London, but hello, wherever you are in the world. It's very nice to be speaking to you, and thank you to Deborah and Audrey at Arthur for making this happen. And I'm really pleased so many people seem to be dialing in. Nice to see you all, or at least hear you all, hopefully. My intention is this is going to be a really interactive session. I've got far more questions than answers, so I'm hoping that people will feel comfortable just weighing in and jumping in whenever the mood takes them. I'm going to spend maybe 5-10 minutes tops setting the scene, saying a little bit about myself and Rob and Impact Instruments and the journey we've been on and are still on. And then hopefully just introduce you to these three topics that have arisen during our work. And although they mean something specific to us, I feel like they're general questions that cut across some of the portfolio management or project management decisions that you all might be facing. I certainly hope that's the case. We're really interested to find out what the sort of prevailing opinion is from this group, or whether it's just a lot of very different opinions, which it may well be. And we hope that finding that out from your fellow callers is interesting to you guys as well. So that's the roadmap. I'm going to say a little bit about Rob and I and Impact Instruments to start with. Rob is on the call. He's audio only, I believe, at the moment. He's mainly going to be listening in and taking notes furiously, I think. But he's my colleague. Very greedily, we both got two titles. That's especially greedy as there's only two of us in the company. Rob is Chief Impact Officer and Chief Finance Officer, and he's a fund manager by trade. He's worked with a number of funds based here in London. You might have heard of Bessemer Trust, Saracen and Partners, Laxey. He's managed funds for all of those. I'm very pleased that he's now working with us. My name's Scott. My background is research science. I trained in AI at UCL, feels like a long time ago now. And I worked in London labs as a research scientist for a while. I crossed over onto the dark side, did some consulting, and that took me all around the world, mainly with international NGOs. And back then, the area that I specialized in was called enterprise-based development. And for those of you that are as old or older than me, will remember that as a sort of phase that the NGO world, the third sector, went through as a precursor to modern impact investing. It may still be alive and well. I'm not sure. It'll be interesting to hear from. Impact Instruments is a concept Rob and I have been working on for several years. Recently, the last 2 years full time. Before then, we were trying various ways to get it off the ground. The reason it's called Impact Instruments is because we really like the double meaning in the word instruments. What we do is new kinds of financial instruments, but we also build new kinds of digital ways, digital tools for measuring the world. So we bring those two different kinds of instruments together. And what we've always been interested in is what's possible at the intersection of those two different things. What's only possible if you bring new kinds of financial instruments together with new kinds of technology. And in particular, we're interested in verification technology. How do you prove what's going on at a given place at a given time for a given person? That's the big picture. I think the journey we've been on, roughly, so you know sort of the shape of how we've been moving, is we started originally thinking that we wanted to develop a new kind of impact fund that invested in slums, in informal settlements. This was a high growth area. There was a lot of research emerging at the time. And we did some research on the ground. We worked with partners in Turkey and Brazil and Colombia. We're very fortunate to be shown around some slums, meet some people, and we developed a system for verifying, helping people to verify for themselves the kinds of informal economic activity that were going on the ground. We had a number of interesting conversations, and I'm sure this is familiar to anybody that's done the circuit. We had a lot of enthusiastic nodding and people saying they were very interested. Not many checkbooks. It turned out that that was quite a risky proposition, investing in slums at that point. But where we did get interest was in the technology and how we were going to actually deploy this money and measure its impact. And so that's what grew legs and went forwards. And it took two forms over the last couple of years. We secured a DFID grant underneath one of Acumen's projects, their latest agri-fund called ARAF. So we started an R&D project to build the platform as part of that program. And we also were the lead organization in an IDB funded project with the Chilean government to measure deforestation using AI and satellite imagery. Both of those projects went very well, enjoyed a lot of positive feedback. The technology worked, which is always a good thing. And then a couple of big things happened. The first for us was there was an election in the UK. The government changed, DFID got downsized, reintegrated into another government department, and that grant suddenly became very uncertain. And then, of course, something you've probably all heard of, there was this thing, this global pandemic thing, and that threw up another set of challenges. We were very lucky in many respects. We were a technology project working remotely for the largest part, and so through both of those pieces of work, we were able to continue. It disrupted lives for people on the ground that we were working with in our partner countries, and that did cause problems. So where we've been coming out, at least, you know, we hopefully, fingers crossed, we're coming out of this phase of this pandemic. Where we've been in that period in the middle is trying to stay in touch with our local partners before we could travel. We managed to get a trip to India in late last year, which was the first time we'd been in country with our agriculture partners for a long while. We managed to keep the conversation going, but now what we're finding is that both of those projects are slowing down as people and organizations build capacity again and come back from what everybody's been through. So we're working in Chile still. As I'm sure many of you know, there's a change of government going on in Chile. And so any dialogue with the government has ground to a halt there. So we're waiting to see what comes of that. And in India, it's less clear why we're seeing pacing problems now, but we think it's because we're mainly working with organizations that are in rural areas, and the capacity of their farming outfits is only just coming back and getting back up to full strength. So we're hoping those conversations pick up, but at the moment we are very much feeling like things have slowed down and we're in a different gear. And so interestingly, that's prompted conversations here in the UK. And we've started talking to a new client very recently about a new kind of impact investment fund to do with scalable verification. So we've come full circle. We started with a fund, we shifted to the technology. Now we're back to a fund that is enabled by the technology we built in the meantime. So there's a nice symmetry to that. But it would have been great if we could have just got there the first time. Okay, so that's where we are. I think more about what we're doing may emerge as we get into the topics themselves. But what we're hoping is that these are very general themes. I think, although I appreciate the hyperbole of the question, and these are the 3 hardest questions for impact investors, I think there was possibly a little bit of license taken with that. But they are certainly hard questions. And we found them really interesting, and we found interim workarounds, answers to them, but we're very interested to hear what you guys think. I'm probably just going to launch into the first question and set the scene for that, but I'm just going to pause here for a second to check everybody can hear me okay, and there's any questions with what I've said so far or the roadmap for the rest of the call.
Hey, Scott, this is James. I think I would love just like 1 minute 90 seconds on the actual technology that you're employing with these different grant programs you mentioned. What is that verification technology? Just really high level, just so we on the same page, if you don't mind.
Absolutely, yeah, thank you, of course. It's very easy to think of it in two halves. There's the sort of space-based half, and then there's the ground-based half. The space-based half is best exemplified by the Chilean project. We take satellite imagery as it's available, use AI to analyze most of Chile at the moment, and the AI detects where recent deforestation events have occurred and sends a targeted alert to the right person in the Chilean government so that they can take action on the ground. There are several other similar technologies. That's the sort of the less differentiated of the two halves, although what's particular about that platform is the way that we can measure change over time. And the interface has been built basically in consultation with the Chilean Forestry Commission for how the time window they want to use to analyze that change. The other half of the technology, and the part that is really the most innovative bit, I think, is what happens on the ground. And we've built a mobile app which lets smallholders empirically prove exactly what's happening in their fields. And that's a taller challenge than it sounds technically, because what we've had to do is build a secure chain of custody for the data all the way from the field to the cloud where it's then analyzed. So we can be sure that that data hasn't been tampered with or miscollected in any way. So what we say is this data is gathered by smallholders. There's no form filling, they don't have to type anything, they don't have to read anything. It's impossible to make errors because they're just taking photographs of the real world. And so we can empirically prove what's happening on the ground because of the integrity and authenticity of that data that's coming back to the cloud. And we triangulate it with multiple data points automatically to make sure it's genuine.
Super interesting, very clear. Thank you.
Thank you. Anybody else, or should I press on? Great, thank you. I'm going to launch into our first topic. This hit us very early on as we gravitated towards India as our first target market. So I think you've probably got a sense of what's coming. We're a UK company, and we both studied here, we both trained here, and yet now all of a sudden we're creating a company that is designed to tackle a problem or address a market in India. So this is a sort of north-south kind of transition that we're making. And very, very quickly, it was apparent that there are big questions around this, particularly ethically. 10 years ago, maybe even 5 years ago, this would have been a perfectly normal state of affairs in the circles that I moved in and used to working in. These days, our direct competitors are from Indian technology hubs. They're Indian startups with Indian people. And suddenly we're talking mainly to Indian VCs rather than VCs in the US or in the UK or in the rest of Europe. So this immediately raised a lot of internal questions for us. And I would be very surprised if we were the first ones to wrestle with some of this stuff in recent years. And it comes down really to how you conceive of your theory of change and the ethics of where money comes from and where a company operates from in order to have a certain impact. So for us, we asked fundamental questions like, should we even be doing this? Are we displacing an Indian company that might be just as good as us with just as useful a technology? Should we even be entering this space? Should we be trying to get VC capital from an Indian VC? Are we taking an opportunity there from another Indian startup? And we kept coming back to this guiding question for us: is what we're offering, are we confident what we're offering is significantly better for the end user, for smallholder farmers, than anything else that's on the market? And we just had to keep making sure we were comfortable with that to feel okay with our strategy. I can say a little bit more about how that developed, but before I do, I'd really like to bring in some other people, particularly anybody that's had any experience of this or has met with a Northern Hemisphere startup, if they're a Southern Hemisphere VC or vice versa. Has anybody else developed a policy around this or come across this in the last couple of years or so? An open question, please.
Scott, it's James again, and I'll just acknowledge we absolutely recognize the phenomenon as being in our space, which is health innovation, technology-driven health innovation, that the local emerging market-based VCs are frankly more active, more with their fingers on the pulse, more interested in the opportunities, and become, if not the dominant audience for the entrepreneurs we represent, certainly a significant one. And no, we don't have policies, but we're keenly aware of the phenomenon you're discussing.
Thank you. And has it caused problems? Does it give you pause? Or is it just about where you put the money?
No, I think it gives pause. We're not at the point of conflict yet, but it gives me pause for some of the same reasons that you mentioned, and potentially an upside on a ethical, moral, right alignment perspective, in that how incredibly powerful to have locally based stakeholders, both investors and entrepreneurs, representing solutions and representing capital for the markets they serve. And if my own version of how the world should be aligned, this is not a bad thing. There's a question as a Northern Hemisphere intermediary, how we fit into that ecosystem.
Yeah. Thank you. It's good to know that resonates, certainly. We started to think, is this a decolonization question? Not everybody has the privilege of learning about AI at a big UK university. Is this the sort of tail end of a world where we're exercising some kind of privilege over people that didn't have that privilege simply by bringing a technology proposition overseas? That genuinely worried us. As it happens, the competition in India is fierce and strong and extremely competent. So maybe it's a better ethical question than it is an actual practical one. I mean, there are fundamental differences about the approach as well that seem to be cultural. So the route to market was a way that we were thinking about things differently. There was a lot more on the ground experience, of course, in food systems in India coming from those startups. And they tended for a much more sort of vertical alignment. They wanted to be end-to-end embedded in the existing infrastructure and the way that worked. And we took a more horizontal approach, a more sort of digital layer. And it was interesting how that was less well received and sort of contradicted some of the on-the-ground wisdom. So there are differences, and it's not just the technology, it's the way the technology is brought to bear and conceived of and how it's going to be deployed in the target area as well. But it certainly raised a lot of questions. Two things came out of it for us. Almost invariably, people said, if we go further with this, you're going to have to start an Indian company. And you could see that as a structural thing. And that's just we have a presence there, so we need an Indian limited organization. But also that was in tension a little bit with how we thought of ourselves. It was a global platform. India was, if it worked, was just going to be our first market. And there are other markets that are comparable in other Southern Hemisphere countries. And so would we then just start up a separate organization in all those countries? Or should we stick to our guns and say, this is a global platform. We don't really care where it's domiciled, but we want to have that global perspective on it. It's not a national thing. So that sort of led to a new set of questions. The other area was a logical conclusion that just jumped out to us was this needs to be owned by stakeholders. Ownership seems to be the question. And so if we can give the actual end users, the smallholder farmers, a genuine equity stake in this technology, then that seems to us to go some way to alleviating some of these problems. So we came up with this phrase, owned and operated by, for the platform. And that sidestepped the national question as well, because people that used it in the next continent may also be owner operators. Of course, then that opens up a whole new category of interesting questions about how you share equity with users when there are potentially millions of users. And I think the reason this gained traction with the people we were talking to was as much from a business perspective as it was from an ethical perspective. If you see it as a customer acquisition and loyalty scheme, use our technology rather than this other technology, and you'll actually own a piece of the platform, and there will be dividends for that in the future, then that's a nice proposition to take to a smallholder farm. So I think people believed in it for that reason. The specific conversations that we had didn't seem to worry too much about the ethics of it. We had two sides to this. Several people said some kinds of VC isn't going to worry where the money comes from as long as it delivers what it says it's going to do. But other VCs we spoke to certainly did, and it was something different for them. So that was our journey with it. I'm going to ask again if anybody wants to come in on some of the things that we've just discussed, sort of the more detail below that initial question, how equity ownership might be shared with owner operators, and whether something should be seen as global or should have multiple national identities. Anybody want to weigh in on either of those?
I saw before that Nicholas did raise his hand. I'm not sure if his question has been answered or not. Nicholas, if it hasn't, please go ahead.
Yeah, thank you, Deborah. It's been more a comment on the kind of local capital versus international, and I think there's a two-layer system. One is where you really have a global market for VC-style tech investments, and there's another layer for what could be called, I don't know, oxen businesses, yeah, like agricultural processing and that kind of stuff. I sit on the board of a large US NGO called Heifer, and we've launched an impact investing initiative to invest exactly in these kind of businesses. And in Nepal, it was about, there's a program which includes 40,000 women farmers raising goat, and they've been producing so much excess goat meat that a slaughterhouse was due to be built. And we ran the numbers, and it turned out, to process it in the west of Nepal, freeze it, and then ship it or truck it to Kathmandu. And the numbers came out, for a plain real estate investment of around $600,000 at a 25% IRR. So we said, if no bank is coming in on this one, then we'll do it ourselves. And suddenly, when we said we do it from the funds of Heifer Foundation, then there were the offers from the bank, from local banks in the order of 4 million. So the capital is there. It's just not available. And I think what we need to ask ourselves, both as impact investors, especially operating in frontier markets, and as philanthropists, is how we can be those bottleneck plug busters in order to trailblaze and catalyze this kind of capital. If even local regional banks in the west of Nepal have this kind of money and are willing to lend it. So I think it's really availability of capital, not existence of capital. There is almost a superabundance of capital now. And I think the fact that you have lots of local VCs and very professional ones, I operate more in East of Africa, and it's the same there, is testament to that. So I think, for me, the question is, in particular for that kind of more local grounded market, for these kind of oxen enterprises, which may not be those equity stories, but which create real value, real impact. In particular, also offer the possibility for ownership, because many of those are cooperatives, and that ties in with your first question. Yeah. Yeah. So that was my comment. Thank you,
Nicholas.
Thank you very much. I'm really glad you made it as well. And so in that particular example, it's about catalytic capital, and you know, you use the word solving a bottleneck. So having a higher risk appetite than maybe some of the local capital in order to unlock that local capital. Does that then imply that there's a line where catalytic capital stops at a certain volume and leaves enough room for local capital, or would there be no problem with the initial investor taking 70, 80, 90% of the opportunity? Where does capital stop being catalytic?
Sorry, just one comment there. I don't think it's about risk appetite. It's about appropriately pricing risk. The fact that Heifer has been operating for 3 decades with these cooperatives allowed it to price the risk properly. Yeah. So if you ask the country managers, where would you, if we gave you $1 million, where would you invest it? It takes them 3 minutes to say where and with whom, right? And of course, the bank cannot do that. So it's not about risk appetite. We don't have an appetite for risk. Yeah? It's more about appropriately pricing risk. And this is, I think, really where the mainstream financial markets, even impact investment markets, absolutely fail in appropriately pricing risks and in appropriately valuing opportunities.
Thank you very much. Could I bring anybody else in on that?
I just kind of always want to give the entire ecosystem what we call in the United States a hall pass, because the climate is changing so quickly. And one thing which you didn't mention, but is embedded in all the phenomenon that you described, Scott, is the concentration of knowledge capital in frontier markets that has accelerated amazingly in the last 3 to 5 years. It's where I believe that local banks, emerging market-based banks and VCs are trying to keep up themselves with the power of the innovation, the technical skills that are present, and then the capability for scale and acceleration, which wasn't there previously, and by the advent of the knowledge capital and technology acceleration suddenly is.
Yeah.
And so I'm not sure if we're at a juncture where you get to ask the question very meaningfully that you just asked around what the ratio should be of local versus international capital. I think it's an all-comers, it's an innovation mindset when you're thinking about financial instruments that help all parties feel that there's some de-risking, or as Nicholas said, a proper evaluation of opportunity, which I would completely agree with what Nicholas says, that's been lacking. There's not been proper assessment of risk and opportunity. And we're at a place where we can do that now, but it is going to take all parties with diverse diverse stakeholder groups to make these to reveal these opportunities and leverage them for impact scale. Yeah, so I guess, you know, it's such a nascent phenomenon that we're all watching and participating in. And so therefore it got to be experimental in our approaches. Absolutely.
And thank you for making that important point about knowledge capital passing an inflection point as well. That's a critical ingredient. Yeah, thank you. Good. I'm thinking maybe we move on to the second topic, unless anybody else wants to come in on that first one. Good. Okay. So overlapping, but with a little bit of a different emphasis. Another inflection point that has been crossed recently, depending on where in the world we're talking about, is the penetration of mobile devices. And we're talking smartphones rather than feature phones. It used to be the case that you couldn't reach the kind of demographic that we were most interested in, or you couldn't reliably reach that demographic if your technology was delivered via smartphone. We've passed a point, I feel. Certainly our recent experience in India has confirmed this. I'd be keen to hear on people's experience elsewhere, where although device ownership may still not have crossed that threshold, access to a device certainly has. So everybody that we spoke to on smallholder farms had a family member that had access to, that had a smartphone. And so whether it was the parents regularly seeing their sons and daughters who would give them a go on their mobile phone, or whether there was an actual informal or even formal service for borrowing or renting a handset for a specific purpose. With all of these things combined, we didn't feel in the last year of conversations that there was any barrier to our target demographic doing things for themselves on a mobile device. And that's a recent thing, I think, certainly the last 2 or 3 years maybe. And that opens up a whole different proposition of intervention that we've been hesitant about, I think, historically. And it starts to raise interesting questions. And this one's a little bit more future facing, but we do verification technology. And so if there's an advantage in an individual being able to directly verify to you empirically without any doubt what they've just done, what's in their field, the job that they do and how well they do it, who they are, their identity as well. This starts to potentially disintermediate some other layers in the ecosystem that we're used to having in there. And it opens up the possibility that a technology platform can come from anywhere or be anywhere and have a direct relationship one-to-one with an individual and make investments. Our model was to give credits for approved third-party services because that was cleaner than actually dealing with actual money. But it's perfectly possible to use digital wallets to actually disperse funds and recollect funds in a microfinance sense. And this raised some interesting questions again. And I think 2 in particular that I'll flag up that I'd like to sort of open up to the floor as well. Is it a problem or is it a benefit that these other layers in the ecosystem might start to be more disintermediated? What was the role of local partners? What was the role of local salespeople? What was the role of local verifiers who turned up to audit things? Are those roles still valuable? Are they changing? Does it matter if they get less and less? Are we happy with a technologically mediated solution? Are these things that people are starting to see or worry about? And the second one, I think more broadly, what are people's theories of change around the economic impacts at a very local level? When you make an investment in a company, a small company, a big company, how do you imagine that economic effect playing out in communities themselves? It used to be a big problem in the development world that you couldn't rely on how much of the money that you were trying to get to a certain beneficiary group was actually reaching that group. Now we can be certain. So what is the problem? Where has the problem shifted? Quite a few interlocking issues there. Can I bring anybody in to comment on any of those?
Just one comment maybe from my side. What I do see with technology and also with the platform that we run, which is a platform that brings together investors and entrepreneurs. And we try with the platform to make it easier for investors to invest into companies around the globe. And to actually, with that platform, our intention is to bring down transaction costs so people don't spend huge amounts of money going into countries through due diligence and then invest maybe $50,000 or $20,000. But what we always see over and over again is that interpersonal connection that technology cannot replace. That technology is an amazing thing, but people still need or look for that face-to-face time, that coming together and work together as a partner on the ground, having meetings, sitting together in one room. And I think that's a crucial thing that, I mean, technology is an amazing thing, but it's difficult to replace that bit, which is very important.
Absolutely. I completely agree. And one thing that the partners that we started working with in India were adamant about was that a farmer, even if they were very technologically confident, would still need somebody that they trusted and respected standing next to them before they would follow what the options that the mobile app might be giving them. And we saw this firsthand. Like the farmer holds the mobile, understands what's happening, knows what to do with it. But when it comes to taking some advice from that, from information on that mobile phone, or maybe taking up an offer, then they want somebody that they respect to say, this is what you should do. It needs that human accompaniment. I think for us, we wondered how long that cultural barrier would last, and whether it's something that gets eroded quite quickly, as we've seen with other technological adoption rates. Yeah, absolutely, that's certainly true. And for us, we couldn't even be contemplating what we're doing in India without partners. We need partners on the ground, obviously. But then is there perhaps a danger that with some other faster, more aggressive interventions from purer technology plays, that those sorts of partners get marginalized a little bit over time, and there's less of that collaboration in country? Does anybody else have any experience of this that's worked with a tech proposition, particularly a sort of consumer focused or very small industry, micro industry focused tech proposition?
I'll jump in again, Scott. Only in the health sector, just a perspective there. I mean, you don't need to be within the health sector to know one of the biggest phenomena that has been generated as a result of the pandemic is a consumer's willingness to use digital technologies to access care. And so that boundary, that kind of timeline that you were wondering about, I think is dead obvious in the context of health services. Okay. And in fact, that assumption that consumers and intermediaries alike will depend on technology to make their consumption and their business decisions is the backbone of many of the businesses that our company represents. There's huge faith that the technology will be sufficient and user-friendly enough and trusted enough that it's going to allow for scale, both socially and commercially. At the same time, I really agree with what Deborah said, and maybe we're talking about apples and oranges here when it comes to decision making in the context of investments of the size that their platform uses, or the size that our platform is primarily focused on investors who are looking at 1 to 20 million US in capital investments. And there I would absolutely agree with what Deborah said. Its personal relationship is still essential. I'm not sure when the day is that an investor parting with that kind of money is ready to do it all based on a technological set of assurances and tools. I think it's people in the end that are still making that. Now, it may change, but at the moment, that's what it looks like to me.
Thank you.
Yeah, if I just may say one last thing to that topic is that what we do see also is that there is as the new generations are coming up, they are more willing to trust the technology. They are more willing they're more surrounded by technology than we did. And I think it's building trust. It's growing up with it. It's a shift of mindset that it's okay to do it with technology only. And I think it is coming. And I think also the global pandemic showed us that it actually does work. I mean, I know people that never used Zoom calls before, and now they're crazy about Zoom calls, and all they do is Zoom calls instead of meetings, which maybe not, you should see people face to face. But I do, the point I want to make there is that I think it's trusting the technology and knowing that it works will make it much easier for you to use.
Yes, thank you. Trust, either in people or in technology, or a little bit of both. And I think you hit the nail on the head a second ago as well, when you said that the reason that your platform exists is to cut transaction costs. And I think that's the big driver. But I just wonder how that pans out, and whether that's a danger as well, that there's a sort of race to the bottom in those transaction costs that technology offers, and could potentially sideline the human relationships if it's not done in the right way. Thank you. I'm going to move us on to the third topic, I think, unless anybody has some burning comments to weigh in on mobile phones. No, good. So number 3, and I think this is possibly a conversation that you may have already had, but it's very interesting for us to see where you are with it. We're in this boom of an offsets economy, if you like, where there's an awful lot of capital flowing into companies that can offer carbon offsets. We've spoken to 2 companies operating globally who have had their businesses changed last year unrecognizably. But the worrying thing, and by their own admission in both cases, was that instead of doubling down on the types of project that they were recruiting and gaining access to in order to sell offsets, or the diligence with which they were measuring those projects, instead of that, because of this influx of capital, all of a sudden they've concentrated on scaling up the number of projects they can acquire with using their existing methodologies, which again, by their own admission, have weaknesses. So this is about companies that want to offer offsets to corporates who need to find projects on the ground, forestry projects, agroforestry, agriculture projects, sometimes biodiversity and ecosystem services as well in some countries, and control the value of those projects uniquely, so that they can offer them to these corporates that want to have voluntary offset schemes. So we've already seen that in the short term, this doesn't solve the quality problem, and there are absolutely no official benchmarks for how you rate a good carbon offset project at the moment. That's a known problem, and those benchmarks are coming through. Whether they're in time or not is yet to be seen. But from an impact investor's point of view, this is a high growth slice of the economy and the impact investing community. What are you guys thinking about the ramifications of getting involved with it? We started to get a lot of interest in the value of the carbon offsets, even though we were primarily interested in agriculture and produce and yield and information for smallholders. But really, a lot of the interest came from the value in the carbon in soil. And that could potentially have a distorting effect on where we position the platform. And I think other people have found this too. So is there a policy emerging in the impact investment community about offsets and how potentially short-term or transitory they need to be? The premise of an offset is that it buys you time in order to gradually do things a different way. But of course, we all know that the potential problem is that it's just paying for pollution elsewhere or exporting the problem. And it's a kind of permit to carry on business as usual if you can afford to pay for it. So I mean, I'm interested in anybody that's developing a strategy on this front. I think there are broadly 3 ways to tackle it. Do you steer clear of offsets altogether because you're worried about the short-termism of it and the greenwashing associated with it? Do you bank that it's a good transition strategy and it's a useful mechanism, and start to proactively look for the next thing that comes after it? or are you already looking for much more than just an offsets model? What does offsets plus look like, or what's the next thing that gets us beyond that economy? I'm very keen to hear from anybody that's wrestling with any of these.
Hi, Scott. Nice to meet you. My name is Elia. I'm working at the United Nations Environment Program at the Finance Initiative. And we work together, where I consult mainly the Net Zero Asset Owner Alliance. And then, of course, we have all these global asset owners that are trying to set these policies within their global companies. And I basically just can give you a little bit like 2 policies that we are looking at and that we also try to implement, and that these global companies try to implement. And one is connected to the SBTI. You probably know it, like the Science-Based Target Initiative. And there, if you look at carbon offsets or carbon credits, they are never acceptable. So they don't count to your overall decarbonization. That's their policy in these sector pathways. And the same thing is, we have the so-called target setting protocol within the Net Zero Asset Owner Alliance, where basically all these global asset owners, that's how they set their targets to decarbonize. And also their offsets or carbon credits, you can make use of them, but they don't count to your goal. So not even long-term removals. And that's just a little bit like to maybe comment on that. And what we are at the moment rather discussing is a little bit the whole topic on carbon allowances. We don't really have the answers yet, but that's a little bit like the what we try to discuss, like what should be the priority, how should we treat carbon allowances versus carbon offsets.
Thank you. That's really interesting, and thank goodness you were on the call. You're the perfect person to be answering this question. Thank you. So that's really interesting that in the more progressive frameworks that you're talking about, it's already beyond offsets, and you can do that, but it actually doesn't count, and it's only decarbonisation in your own business that is measured and is valid. And I'm wondering if whether we've already leapfrogged the offset stage in many circles. But thank you for the term carbon allowance. That's really nice. As you say, it's a sort of mix of the two, and I've not come across it. So does that mean that if you are physically decarbonising for a certain amount, you're allowed to have a certain amount of emissions, or to offset a certain amount of emissions?
Yeah, that's exactly that. It's basically a little bit like a permit that gives you the legal right to emit the ton. And that's where we really go, also where we bring in the legal aspects and also this whole carbon pricing topic on a global scale. It's exactly that. Thank you.
That's interesting. I'm going to go away and look into that. Is anybody on the call, and I'm hoping you can stay and field questions with me. Is anybody on the call investing in offsets-based businesses?
Go ahead, Nicholas.
First, I don't fully agree that it's kind of greenwashing. For me, offsets, be it carbon offsets or the water credits, health credits, gender credits, etc., that we see emerging now, are a way of pricing the non-emergence of something undesirable in the most efficient way. Yeah, so I see it and that's pretty fancy, yeah, pretty advanced. And so I don't see it necessarily as greenwashing. Yes, it's a band-aid that will carry us over, but mainly what it does is it allows to monetize the karmic benefit of doing something which is not priceable in a product. Yeah, because the value occurs in a karmic way, like a public good, like national defense and street lighting and internal security, etc., to everybody, and it allows it to cost that, to price it, and to capture it in monetary terms for a particular company, and that is extremely attractive because it allows to layer additional value and financial value on top of, or to transform social benefit, if you like, into financial value. And that can lead to either additional or even fully fledged financing mechanisms for good. And I also would take issue with what you said before about there not being any mechanism. There is official mechanisms. There is, different kind of certification mechanisms. There's the gold standard, which is spun out from WWF, and I think that's fairly respected. And what we've also seen, and we've worked with WWF and the Gold Standard Foundation in spinning out a company called SustainCert, which I really encourage all of you to take a look into. Because on the one hand, it's the certification business against the gold standard that has been spun out into a service business, but it's also broadening the logic of credits from the carbon credits to all other SDGs. And the main clients are value chain players like Mars and Unilever, etc., as well as big impact investors. Blue Orchard was one of the first. Who would like to include these methodologies across all SDGs in their portfolios. On the one hand, in order to have a measurable way of massaging out destructive and exclusive and exploitative practices from their value chains, but also for the time being that there's people willing to buy these indulgences, if you like, to monetize on that and add additional layers of revenue and value.
Thank you very much. And I hope I'm not jumping to conclusions, but I see a pattern in your thinking there as well about pricing things in. It's lovely clarity. Thank you. Maybe I misspoke earlier about the greenwashing. I think there's a concern that greenwashing is a possibility because not all projects are equal. There's a scale, and some projects have a greater carbon value than others, and it's not always difficult to discern that, especially while things are voluntary. If you're looking for a certified product by one of the verifiers, like Gold Standard or Vera or one of these people, these organizations, then certainly that's a step in the right direction. But even within their schemes, there are gradations, and we're seeing, how do you put a measurement on more complex impacts and not just carbon? I really like the way you describe something intangible being made tangible by the purchase of a permit, and a sort of an artificial pricing mechanism for something that is real. It's just very difficult to tease out otherwise. How does that fit with carbon allowances and the decarbonisation only direction? I'm sorry, on my iPad I can't see the names of the people I'm talking to, but our previous UN respondent, I'm sorry I forgot your name.
Elia.
Thank you.
Yeah, sorry, I was just away a minute. What was the question?
Do offsets have a value as a way to price in something that should be there but isn't? Is it a useful financial mechanism for the real world in the absence of that real world manifesting one for itself?
Yeah, I mean, that would be great if I would have to answer the final answer to that, right? I mean, what I can tell you, I think what it makes interesting in the sense of this whole calculation, it raises awareness, right? Like all the companies that are making use of these offsets have a certain awareness about that topic and are looking on how they can decarbonize either their portfolios or let's say their value chains. And that's already, let's say, the first big step, because it raises awareness. You start to measure and then you start to price in. And that's also a little bit what you can do with the whole aspect of shadow pricing, just saying, okay, we put a price on carbon, how much would it actually cost if we would have to pay for all the carbon? And with this, I think that's maybe, yeah, as Nicola said before, it doesn't necessarily have to be greenwashing at the end, but I certainly agree with your point in that that there is a certain danger if you only allow or if you rely fully on carbon credits.
Thank you. It's a fast-moving space. It's really interesting to hear where everybody is with it. We're really close to the end of our time, so I'll just say very quickly, the way we got comfortable with it was to begin with, we started thinking about offsets plus and what extra value, what different kinds of impact can we offer alongside offsets. But actually, the thing that made most sense to us was to flip that around and say, can we have impact investments that also happen to have a byproduct that are offsets, and make it more of a subsidiary kind of element to something else? So the main purpose was maybe a socioeconomic impact investment that just happened to have almost like cashback offsets. So that's an idea we've been playing with. Thanks very much, everybody. Deborah, can I hand, sorry.
Thank you, Scott. It was a great session. You have, I'll close, we're at the hour. If you have one final comment, Scott, you're welcome to share. I know there might be a few people that want to have more to share or have maybe questions. So please feel free to reach out to Scott. I'll be sharing his contact details and this recording. So please feel free to speak to him and to Robert if you want to know more about their work. By the way, Elia, who is here today, he's going to be with us next week for a session on financing the transition to net zero carbon emissions. So if anyone is interested in the topic, Elia has some interesting content to share there. If you have anything a topic or anything you're doing that you want to share with us that you would love to share also with our members, you're welcome to reach out to us, and happy to see if we can set up something up. Any final comments, Scott, before we close?
Just to say thank you to you and Arthur, and thanks very much to everybody that listened in, especially those that contributed. Very interesting. We're taking a lot away from this. Thank you.
Thank you very much. And thank you also from my side for everyone that joined us today. And I look forward to see you at another IFB session in the coming weeks or month. Take care. Bye-bye, everyone.
Cheers, everyone.
Bye-bye. Thanks.
Bye.
Bye. Thank you very much.